All right, let's just jump right in. Ever wish you could just put your investments on autopilot? Well, you can, and it's probably way simpler than you think. We're going to walk through a super straightforward 5-step plan to get what's called a systematic investment plan, or SIP for short, up and running like today. But before we get to the how, let's just acknowledge the feeling. You know the one, the investing overwhelm, right? I mean, the amount of information out there can feel like a total tidal wave. You hear about stocks, bonds, crypto, ETFs, and your head just starts spinning. It's a lot. And chances are you've got that little voice in the back of your head, right? The one that's always whispering, "Hey, you really should be investing for the future." You see it everywhere, you hear your friends talking about it, you know it's the smart thing to do. And almost immediately after that voice comes another one that says, "Yeah, but where do I even start?" It's that classic analysis paralysis. If you've ever felt that, trust me, you are not alone. But the good news? There is a really simple way to cut right through all that noise. And that simple solution, it's called a systematic investment plan, or as most people call it, a SIP. Seriously, the best way to think about it is like putting your investing on cruise control. So what is it really? All it is a plan you set up one time to automatically, and that's the magic word, automatically move your money into an investment account on a regular schedule. So think regular and automatic. You set it up and it just does its thing in the background for you. And the beauty of it is how flexible it is. You can use it to automatically fund all kinds of accounts, whether it's a retirement account like a Roth IRA or just a regular online brokerage account. And you get to decide how it gets funded. You could do, say, $100 from your bank account every month. Or, and this is my favorite, you can set it to take a certain percentage straight out of your paycheck. That way you're investing the money before you even see it, which is a total game changer. Okay, but hold on. Before you rush off to set up all this cool automation, there is one absolutely crucial first step. You've got to know why you're investing in the first place. Seriously, this is the foundation for everything else. So, think about it. Are you saving up for something that's just around the corner? You know, like a new car, or maybe that dream vacation you've been putting off? Or are you playing the long game, building that nest egg for retirement way down the road? Because that timeline, it changes everything about your strategy. And this is where it all connects. If your goal is short-term, you'll probably want a safer place for your money, right? Something like a high-yield savings account, which is exactly what it sounds like, a savings account that pays you way more interest. But if you're saving for something long-term, like retirement, you can afford to be a bit more aggressive. Maybe you go with stocks or ETFs, which, by the way, are just these neat little prepackaged baskets of different stocks that help spread your risk around. It all comes down to this. Your why is what decides your how. All right, so you've figured out your why. Now let's get into the how, your simple action plan to make this happen. And that's really all it is, just 5 simple steps. 5 steps to go from thinking about investing to actually having an automated plan working for you in the background. So here's the roadmap. Step 1, we've kind of already covered that. Figure out your goals. Step 2, you choose the right account for those goals. This could be your 401k at work or maybe an IRA that you open yourself. Step 3 is the magic part, setting up those automatic contributions so it all just happens. Step 4 is where you decide what you're actually buying inside that account, whether it's specific funds or those ETFs we talked about. And finally, step 5, just check in on it. You don't have to watch it every day, but maybe once or twice a year, just pop in and make sure it's all still on track with your goals. It's more of a set it and don't totally forget it kind of thing. And hey, when you're on step 2, choosing that account, here's a super important pro tip. Before you sign up anywhere, do a little bit of homework. You want to look for hidden fees, check if they have a minimum deposit, and definitely read some reviews about their customer service. Trust me, spending 10 minutes on this now can save you from a massive headache down the line. Okay, so we've covered the why and the how, but now we get to the single most important part of this whole equation, the win. And honestly, it doesn't get any simpler than this. All the learning, all the planning, it's great, but it doesn't mean a thing if you don't actually do something. The most powerful thing you can do for your financial future is to just get started, even if it's with a small amount. Just start. So let me leave you with this question. Just for a second, forget all the complicated stuff. Forget the noise. What's the very first goal you're going to invest for? Is it that vacation, a down payment on a house, or is it just laying that first single brick for your retirement? Whatever it is, defining that one thing. That's the key that unlocks this entire process for you.